Good morning. You're watching Ask Profit. I'm Smriti Chaudhary, and for the next 30 minutes, I'll take all your stock-related queries and get them answered by our fundamental and technical guests. On that note, let me introduce you to the guests for today. We have with us Mr. Samir from Mr. Samir Dalal from Natverlal and Sons Stockbroker, and we'll also be joined by Ayush Mehta, Technical Research Analyst at Nirmal Securities. He'll be joining us soon. But before we get into the focus for today, let's take a quick look at the markets. The Nifty and the Sensex, the benchmarks are currently trading near day's high at this juncture. If you look at the broader markets, the mid-cap indices are trading slightly higher than the Nifty and the Sensex index. And if you look at the movers today, among the Nifty 50, we have Adani Enterprises that's up about 2.5%, Hero MotoCorp that's up about 3%, and Divi's Lab also nearing about 3% higher. Among losers, we have Infi, and IT is in focus today because of Infosys as well. Nifty IT is the only sector today that's losing. All other sectors are in positive. This comes on the back of a loss of a mega deal that Infosys lost. It was worth at around $1.5 billion, and there's some weakness in IT because of that. So Infi is one of them. TCS is also losing today, down about 0.3%, and other than that, two Bajaj twins are also down about 1%. So that's where the markets are currently right now. Kind of a flattish day today as expected because we're at the year end. However, the focus today is Kumar Infrastructures. If we look at how the stock is performing right now, it's up about 19% at this juncture. Now, this comes on the back of a CLSA note that came out this morning, where CLSA increased its target price to 720 rupees. That's almost double, more than double right now. Now, this is based on the urbanization play. It says CLSA's rationale is that there's an urbanization play, and that can actually be seen in the order book. So if you look at the order book for FY23, it was around 2,800 crores. But till now in FY24, it already has an order book of about over 8,800 crores. So on that note, I'll open up this question to you, Samir. How does J Kumar Infra project look? How are you looking at it, considering it already has such a strong order book? The stock is up 18%. What kind of performance do you expect in the next 1 year from the stock?
So we don't cover J Kumar Infra, but what CLSA's note says and what you all discussed, where J Kumar Infra has a lot of its orders is from the Mumbai region, right? The MMR region. We also know that the tenders have been called for the extension of the coastal road from Bandra all the way to Virar. J Kumar Infra is one of the companies that have bid for one of the projects of the multiple legs of the project. So the thought process is, J Kumar has always been aggressive in the MMR region in placing these bids for construction activity, which is to deal with the government projects, and that is where their order book growth will continue. Again, I don't have coverage on it, so I can't talk in great detail on the value. But the basic thought is that if the Mumbai region keeps developing the way it is and the way the governments are, central, state and city governments are spending money, the probability is that they will get good orders. So from that position, yes, the stock can continue to do well. But again, I think you have to look at valuations. I don't know the valuations, so I will not be able to comment on whether it's a buy, hold or a sell. But if the projects continue the way they are in the region, the stock may continue to do well.
Right. Keeping the election season in mind, Samir, just a follow-up question. I know you don't have coverage, but considering the election season, it does seem like a positive for a company like this one, right?
So election, I think, is more so done and dusted, right? I think everyone expects that the BJP is going to come in the center. Then it comes down to what happens in the state elections. We do know that we have had this shift of the Shiv Sena breakup, and Ajit Pawar breakup and coming into the BJP fold. That election might still be a while away, so I don't think that's going to play a key role.
Right.
So I'm not looking at the election as a major concern or major trigger for this stock. Like I said, it has to do with what kind of orders it wins. But it's very difficult to project all these. We've seen this in the past. If you go back to 2007, 2008, where companies were getting valued on the order inflows that came. Right. And then suddenly people realized that the biddings had happened at such aggressive rates that it was difficult for them to make money. It should not be a similar kind of situation which we are getting ourselves into once again. This becomes a big fear and a big worry in the market for me. Just valuing on future earnings based on what they won. Orders that they won. I mean, what profitability is, nobody is discussing that. And how the cost escalations get passed on, things like that. None of that gets really discussed in these projects. So I would not be overly gung-ho on just order wins and order backlog for all these companies, which has happened in the past. We've seen and what happened to them again after that. So I would be a little wary. But like I said, if order inflows are there, the stock may remain buoyant.
All right. Thanks for that, Samir. Now we'll open up to the queries now, and we've already got a lot of them. The first one is from Mohit. He's talking about Trident. He's already bought shares at 3 rupees, 3.9 rupees to be exact. And if you pull up the chart for Trident, it's currently around 36 rupees. So quite a profit there. Ayush, I'll come to you on this. Welcome to the show. Should they continue holding Trident for a couple of more quarters or for a longer term, or is it a good time to book profits considering there's a sizable profit here?
Hi, good morning. Thank you for having me here. So as we look at the charts of the Trident, it's looking good currently, and we have already recommended this stock to our clients. What I would suggest right now, they should hold the position with trailing stop loss. The trailing stop loss currently lies at 34. I don't feel it should go below 34. So 34 should be the trailing stop loss, and once it crosses 40, we'll see another levels towards 50.
Right, fair point. Let's go to the next question. This one's from Nagvendra Rao. He's written to us from Hyderabad. He's talking about Jain Irrigation. He's already bought the shares at 65, and currently the share is around 63 rupees, so not doing great as of now. And this share was bought 4 years back. Now the returns, he says, are dismal. I'll come to you, Samir, on this. Should they continue holding the shares, or should they just get out of the stock?
So honestly, if you ask me, the person probably just bought these shares recently, because if they go back into the history of this company, maybe 2 years down the road, you would have seen the stock was trading at about 15 rupees or 16 rupees. So the stock has run up quite a bit. Jain Irrigations went through a very difficult period where they defaulted on debt, where then they've gone through various restructurings kind of things, and they finally come out of it. Now, this business opportunity is extremely large when you come to automation of farming in the country. They actually were one of the early movers in the space, and they were doing phenomenally well back in the day till they over leveraged and made a lot of errors along the way. Given that they've just finished the CDR and given that the stock has run up, I mean, I would personally say, look, if I look at the market, the way I look at it is there are better opportunities in the market to make money. Jain Irrigation, we know the management is not probably one of the smartest or, very risk-taking. They are high risk-taking. So I would look at companies where I would have lower risk, where I wouldn't have as much history of negativity and the run-up in the stock that has happened simultaneously. I would take my money off the table and find better stocks to invest in than Jain Irrigation.
If you can name a stock within the space that can be swapped with Jain Irrigation at this juncture.
So I wouldn't necessarily look at something exactly like a Jain Irrigation. I would probably go in for a chemicals and fertilizer company. So United Phosphorus, they're not doing the exact business, but again, they cater to the farm industry. What they do is herbicides, pesticides, again, a large cap company. The stock has gone through a lot of pain in the recent past because of an acquisition that they made overseas, because of which leverage was high. And, there was a bit of concern in the market, but now they're going to raise some amount of equity capital, which will ensure that the debt levels come down. Secondly, what we saw also over the last 2 quarters was the fertilizer space. There was a lot of inventory destocking which happened, right? And now that we are at the end of the destocking and we expect the sales to pick up, which will again lead to operational efficiencies, profitability will increase. They are very well spread out geographically. If you ask me, only 25% of sales comes from India. The balance is from USA, Europe, Africa, South America, the rest of Asia, rest of the world. So they have a good spread out of geographies. They have a good reach. So UPL would be the stock I would be recommending from a year and a half perspective. I believe the stock would probably run up to 750 in a year and a half.
Right. Got it. Next up, Vasu has written to us and he's talking about a couple of stocks. He's talking about ONGC, PNB and NTPC. He has already gained about 10 to 13% on these stocks. Should they continue holding 3 of them? Ayush, I'm going to come to you on this. How are the charts looking for these 3 stocks? Should they maybe exit either of them?
Today the PSU sector is in current and all the PSU sectors are performing well. Let's start with NTPC. NTPC is looking good at current levels, high bottom formation. Again, I would recommend the client to hold it with a trailing stop loss of 293. The second stock we'll discuss here is ONGC. ONGC is looking good at current levels. It has made a very good consolidation and it has given a good breakout and it should be held for a long term. I think the trading stop loss should be around 195 here. And the next stock we'll consider here is PNB. So PNB is currently taking a resistance of 92.40. I feel that will be broken in the current days as long as market as well as Bank Nifty supporting the markets. By keeping a stop loss of 85, one can hold this position.
Right, fair point. Next up, we have a question from Ajay. He's written to us from Jaipur and he's talking about Birlasoft. He's already bought 295 shares at 342. Now, if I look at the year-to-date performance of the stock, it has already given about 147% gains. Samir, how does it look going forward? Would you still suggest holding this stock in their portfolio?
The valuations for Birlasoft have run up way above, I think, what the market comfort or my comfort for that matter, not the market. Market seems to be comfortable with valuations of 80, 90, 100 these days without any difficulty. So it's gone above my market valuation comfort levels. All these companies that are doing this kind of IT services work, I think, the expectation is that once the US starts seeing an uptake, you will see operational benefits. What you will see is the order books growing. But I still think we are a year away from that, and I still think there's a lot that can happen from now to a year. So I think Birlasoft is a company I would avoid if I had to take a call on IT sector. I think some of the mid-sized IT companies like TechM or Wipro might still be better. I mean, Wipro is not a buy recommendation, but from the simple pure valuation basis, downside risk being lower. But TechM is definitely something I would recommend. So if he has to convert Birlasoft to TechM is what I would.
Ayush, would you concur? Birlasoft a good time to sell and maybe some other stock instead of Birlasoft?
Yes, even I was thinking the same. We saw it has been doubled from the buying price, and I feel we should book profit.
All right, got it. We have the next question. This one's coming from Nitin, and he's written to us from Pune. He's talking about Tata Tech shares. He's already bought at the time of listing. They didn't get the shares allotted in the IPO, but they got it after the listing. So what should they continue? What should they do with this stock? Should they sell it considering they have some losses in this stock? Samir, I'll come to you on this. Tata Tech.
If the investor is a long-term investor and probably has a 3 to 5 year horizon, then I think you can continue to hold on. The IPO came in at a decent price. The listing has happened at very unreasonable valuations for fresh investors. But what happens is everybody wants to make an entry into some of these Tata Group companies because at the end of the day, when you look at a 5 year, 7 year, 8 year horizon for these companies, they actually generate very healthy returns. From an investor point of view, you are able to generate ROEs of about 15 to 20% anywhere comfortably. So from a longer term point of view, I think Tata Tech is still a hold because the automation in cars, the kind of sector that Tata Tech is working on, I think has huge growth potential, huge penetration opportunities going forward. So there is one slight negative. One of the companies that Tata Tech deals with in Vietnam is going through a bit of a tough time, which contributes a good 10-11% of their revenue. So if something were to go slightly negative, then the stock were to correct, by a good 15-20%. I'm not saying it will happen. But if it were to, I think that it's time to then add on an average up. So longer term, net, what I'll say, longer term, I am positive. In the short term, not so much. I think a lot of the positives got captured in the price after listing, and it's going to be difficult for the stock to continue running up, I would believe. But you also got to realize you are in a bull market, so valuations is something everyone's not looking at right now. So can the stock run up even in the near term? Yes, but I would wait for corrections to average my stock, but not get out of it. If you are a long-term investor, if you're a short-term investor, I think the technical analyst would be a better bet to tell you what should be done for the shorter term.
Right, got it. Next one is from Vimal. He is talking about Amara Raja battery or Excite. Which one is the best among the two? Ayush, your thoughts?
I feel Excite is better here because Excite is performing quite well from last 2-3 years. In fact, in the daily and the weekly chart, we can see high top and high bottom formation. And if he's holding Excite, definitely it should be holded for a long term. And the short term target, which we are looking maybe next month, and that is 325 levels.
Next up, we have a question from Pramod. He's writing from Thrissur. I hope I'm saying that right. He's talking about EMS. He has already bought shares at 250 levels, and JSW Infra that he has bought at 160. And his time horizon for holding is 18 to 24 months. Samir, thoughts on these two stocks? Should they continue holding this?
So EMS, no coverage, and the other one you talked about was Jindal Infra, right? JSW Infra.
Yes.
So JSW Infra was a recent listing. It's a port company. I think they're expanding quite relatively well. Again, valuation discomfort. Let's take things not only from a stock market, from a particular stock point of view, but from the entire market point of view also. As a fundamental analyst, valuations is something that you have to look at. And the biggest problem we face across the board right now is that valuations for many of these companies have gone far beyond what the reasonable point should be. Today, these are companies that require huge capital inflows right at the beginning of the project, and the payouts for these projects is usually 15, 20, 25 years. So given the fact that, look, we are in the investment phase for a lot of these companies, there's a lot of risk associated with any slowdown, maybe not now, but maybe in the next 1 year, 1.5 years in business could impact the earnings quite significantly. So if you're making profit, which he is in the next 18 to 24 months, I think it'll be difficult for me to say that the stock can continuously rally up, start taking some profits and keeping cash on the sidelines and find better opportunities in the market. If you have maybe a 7 to 10 year horizon, maybe you can continue hold. But I would say if you have only 18 to 24 months, start taking your profits. You have good profits.
Fair point. We'll slip into a short break right now, but after the break, we'll take a lot more questions. Stay tuned on NDTV Profit. Welcome back. You're watching Ask Profit. And you can write to us your queries, any stock-related queries, any listed stock-related queries on the WhatsApp number that's on your screen right now. Do share your name while asking a question. And you can also write to us on any of the social media channels or the YouTube live chat. Now let's start again with the questions. The first one we're talking about is Infosys. Now Infosys is in focus today after the loss of a $1.5 billion contract. But Samir, I'd like to understand, this query is from you on YouTube, by the way. The person who's asked the question hasn't mentioned his name, but based on this loss, Samir, would you say similar losses would probably be seen in the rest of the IT companies? Is this a sign for something? And considering this contract was over for 15 years, so it's not a significant loss to the company as such, but how do you view these IT stocks going forward, specifically Infosys?
Okay, so there are 3-4 questions in that question. So the first question I'll answer is, do you think this can have a spillover effect on the rest of the IT companies? I don't think so. I think this is a one-off situation. I don't think you can call, one swallow, you can call this a summer, right? I until this trend actually sees a pickup, I don't think I would be too perturbed by it. Now, coming to the second question of what I think of all these IT companies in the near term. So I believe that there's a great opportunity for these companies over a longer term because of the kind of shift that is happening in the requirement and consumption of IT by corporates and companies all over the world. Automation, AI, data, digitization, all of these aspects will ensure that these IT companies will continue to do well because Indian companies actually have some of the best cost structures, right? At the end of the day, when we come to cost structures, India is better. When it comes to delivering of services, I think India is par excellence. We are comparable to the rest of the world. Yes, are we maybe one step a little late? Sometimes maybe we are, but then we catch up quite quickly, right? So
but
that's
Samir,
not a problem.
Last week we also saw Accenture's guidance as well, which kind of said that discretionary spending may be slowing down. So do you think that is some kind of an effect on IT companies? And
So that's exactly where I was leading. So I was telling you that the growth opportunity for them is extremely healthy from the longer term point of view. Now, the markets are kind of factoring in the kind of liquidity that is there in the market is pulling stocks up and telling everyone that the IT services industry is going to see the demand uptick right away. I don't think that's going to happen. What you rightfully said about the Accenture guidance, look, discretionary spend for companies in the US is not going to pick up right away because there's still a situation where interest rates are high. They're expecting a slowdown in the US markets. There's still talk of a soft landing recession in the US, which means IT companies are not going to be, companies are not going to be in a hurry to spend for their IT services because that is the discretionary side. That is where I can control some of my costs, which you rightfully said. So I do believe that these stocks are probably in the near term run up. Now, when you come to the Infosys today, when you say $1.5 billion is not a significant hit, of course it is a significant hit, even if it's over a 15-year period, right? At the end of the day, the operating leverages of these companies is the more orders I get, the more profitable I become. Yes, there's a cost structure, it's an employee cost structure, but that I think is that's the gross part of it, but the net part it still matters. So I would look at it today if this was not as raging of a bull market, a $1.5 billion loss order by Infosys would have led to the stock being down anywhere between 7 to 10%, but we are barely down anything today.
Right.
So I think the near term for them may not be as good. What you will see is probably the next quarter results will also be a bit of a disappointment. Stock will come off a little bit more.
Right.
I would not be in a rush to buy IT companies, but if you ask me, is the long term for them good? It is. Corrections, IT companies, Infosys including, closer to 1400 would be a definite buying for me.
Right. No, a significant hit in terms of course it's a significant hit in terms of that because it was over 15-year period and of course all the IT companies' orders are a summation of the smaller orders that they get. I completely understand that point. But moving on to the next questions. This one from Soumya Mukherjee. He's talking about very two small stocks. I don't think Samir would have coverage on these two ones, but Samir, if you do, please talk about these. But Ayush, let's talk about Rajmet and Goodrick Group. Somian has already bought these stocks at Rajmet at 10.7 rupees per share and Godrej Group at 269 levels. They're asking if they should continue holding these stocks, and can they get an upward of 30% move in these two stocks?
So when we talk about Rajmet, it's a T group share, and we have seen a strong sellings from 32 levels, and currently the data is not very good here. So it's difficult to say on this. So I would recommend to avoid on this stock. And the second stock would be
Godrej and Rajmet.
Godrej.
Yeah.
Can you help? What?
Goodrick Group. Goodrick Group. Goodrick Group. Right.
Yes, I don't have the data of these stock actually.
All right, that's fine. That's fine. Let's move on to the next one. So there are a couple of questions on Polycab. Now there's some news around how there are some IT raids happening there, but the market seem to be isn't much moved by this news today. It's up about 1% right now. Samir, looking at the fundamentals now, Polycab has done better than its peers. How does the future look like for this one?
So honestly, Polycab has done extremely well. If you ask me, they're doing all the right things when it comes to it. The demand for the wirings that they are doing is constantly growing because of the last mile reach that is expected to continue. Today, if you ask me, I still think there's a lot of requirement for these wires in telecom. But also, you got to realize that there's a slight shift happening where people are moving towards a more wireless kind of connectivity in the future. Testing for all of these kind of applications is ongoing. So what it could also mean in the future is that suddenly we may see the demand, expectation of demand not to pick up. Now, again, when I come back to valuations, if we simply look at the valuations trading at 80 times trailing earnings is extremely rich. For the company to kind of retain these kind of valuation multiples, they need to trade. They need to grow at about 40%, which is difficult to continue over a longevity, especially when you have only a higher base.
All right, got it, Samir. We are short of time, and unfortunately, we'll have to wrap up this edition of Ask Profit. But we'll be back tomorrow, same time, 11:30 a.m. But hot money coming up. Stay tuned to NDTV Profit.